fact of life for older Canadians. Roughly half of people over 55 have little or no retirement savings. But consumer advocates say that taking out a reverse mortgage could be a smart way to bring in more money.
So we've called in Frank Napolitano from Mortgage Brokers Ottawa to help us out. Great to see you this morning.
Good morning.
Yeah.
Good morning.
Thanks for coming in. Well, let's get into reverse mortgages. I mean, what are we talking about here?
Oh, reverse mortgages typically older Canadians that are looking to not move out of their homes and they want to maintain their homes, but now they're down to pension income. You're not getting the income that you were accustomed to. And let's face it, running a home and maintaining a home isn't as cheap as it used to be. So this is just an opportunity for Canadians to be able to access the equity in their homes and be able to stay in their homes for a little longer.
Okay, you know what? I've seen a lot of ads recently on TV. Like I keep hearing about these reverse mortgages, and Kurt Browning's telling me about it, of all things, right?
Right.
But so is it that you're taking money out? So it's what you already have the value of, and that you're able to borrow on that, or have it, you just won't have it when you sell the house back? Well,
the equity in your home, right? So again, the younger you are, if you retired at a young age like Henry did, well, you can't quite qualify for it just yet. But it starts at 55, and if you're 55 years old, you have access to a certain amount of equity. But most people at 55 can probably afford a home equity line of credit, which is a little cheaper. Going the home equity line of credit route is a little cheaper, and if you're still getting an income in, you might go the home equity line of credit. But I think this is more geared for people that are, it starts at 55, but really it's geared for 65, 70, 75-year-olds who now are just down to CPP and OAS pension maybe, because maybe they had a job that they weren't getting additional income from. So now they've got their house of $400,000 that's fully paid for, and they're looking to get some of the money out, but they don't necessarily have the income to be able to come up with payments. So that's what a reverse mortgage is. A reverse mortgage is, depending on your age, you can get as high as 50 or 55%, but it starts at 35% of the equity of your home. You get it out, and then you don't have to make monthly payments.
Okay. So, well, I know since we have this competitive thing going here, now we need to get into these statements so we can see if we know what the heck we're talking about.
All right.
All right.
Fire away.
Let's try this, because it's going to allow you to understand, I think, this hopefully a little bit more. The bank owns the home.
Oh, that's definitely a myth. The bank does not own the home. You own the home. You always own the home. This is a form of a mortgage, so you're putting a mortgage on a home. It's a form of a mortgage is what this is. Okay,
I'm just going to ask a follow-up question. Do you need to have had most of them, you own the home? Or what if you still have owing $150,000 mortgage owing on it?
Yeah, so you could have a mortgage still owing on it, and again, depending on the value of the home and the age you're at, will determine what that loan-to-value, the maximum loan-to-value you can get on it. So, if you're at a stage where you're at the age where you can get 50% of it and you owe 150 and your house is 400, you can get an additional $50,000.
Okay. All right. So let's talk about if the owner of the mortgage passes away. So the surviving spouse basically has to assume that mortgage at that point, correct?
Well, basically at that point, it's a fact, but at that point, I mean, it depends on how your estate is set up. I mean, in many cases, once a spouse passes away, typically they want to sell the home at that point. But if you want to stay on it, you can just assume that reverse mortgage. I mean, you're still on the property, so you still own it yourself. So at that point, you're not making payments. I mean, if you want to maintain the home, you get to keep the home.
Okay. The bank can force the homeowner to sell or foreclose at any time.
That is definitely a myth. Absolutely, it's a myth because, again, you're not making payments. So, basically what they've done is they've lent on the equity that you've worked so hard over the last 20, 30, 40 years to acquire. And now they're lending on that equity. They know that the property value will continue to go up, and the payments are coming off of the money that they gave you, but it's just accruing the interest is what it's doing.
Okay, now quick question. You just can't go to any bank and get a reverse mortgage in Canada, can you?
No, right now there's one lender that does it. Apparently there's 2 or 3 more and the banks are now starting to look at it as well. So I think over the next couple of years we'll see 2, 3 other lenders potentially come into the market with reverse mortgages because our population's aging.
Well, and we're living longer.
Yes.
I mean, a lot of people probably save for a certain amount of time thinking they had until a certain age, and we're living a lot longer, so that money's got to last.
And you want to keep your home. Like you want to live in your home. You want to have your last few years in your home as opposed to going to another home. So
awesome. Thanks.
Yeah. Oh, pleasure. And just want to say happy 85th birthday to my dad today.
Wow.
Salvatore, buon compleanno.
And good health.
Good health. Very good health.
Makes
and
sense.
still in his home. So
nice.
Yeah.